to The Green Rush, a podcast about the intersection of cannabis, the capital markets, and culture. On a weekly basis, hosts Ann Donahoe and Louis Goldberg of KCSA Strategic Communications speak with the business leaders, financial experts, cultural icons, legislators, and generally interesting people moving the cannabis industry forward. This week is the last of our shows for Marijuana Business Daily's big Las Vegas conference, with a mashup of three fascinating but very different guests. Louis and Ann first speak with Max Cherney from Dow Jones MarketWatch. Max is one of the sharpest journalists covering legal marijuana and is the only wire reporter who is solely tasked with covering our industry. We also speak with Emily Paxhia, co-founder and managing partner of Poseidon Asset Management, where she's reviewed thousands of companies in the cannabis industry and has worked with countless founders in many capacities. She's helped to shape entrepreneurs' pitch preparations, their go-to-market strategies and product launches, and advised on day-to-day business operations. Emily has held board seats for 3 portfolio companies and participates as an advisor to multiple teams. Finally, Louis and Ann speak with Richard Carleton, CEO of the Canadian Securities Exchange, which is the home to the majority of the publicly traded American cannabis companies. 2019 was a tough year in the public markets, and Richard has some fascinating insights into what happened and why, and what 2020 could look like. This is one of those shows where you're not going to want to sit back, so lean forward. Now on to our conversation with Max Cherney, Emily Paxhia, and Richard Carleton.
Ann.
Hi.
This is year 2 on Podcast Row.
Oh my God, we're so bright-eyed and bushy-tailed right now.
Are you
Enjoy
kidding
it.
me?
Yeah, I feel good.
I didn't sleep for shit last night, but that's okay.
You didn't take a gummy.
I did take a gummy and it kept me up.
Really?
Yeah.
All right. You
it
didn't
was
take the right gummy.
I did not take the right gummy, but that's okay. This is the first interview of probably 10 that we're going to be doing over the next 2 days, and we are starting off with a fucking celebrity. A rock star in cannabis journalism, Max Cherney.
Bow down.
Yes. So there are not many wire service reporters who are exclusive to covering the cannabis beat, and we have him, the guy, who is the only wire reporter who literally only covers weed and weed stocks. Max, welcome to the podcast.
Well, thanks for having me, Louis. That's quite the introduction. I hope I can live up to this grandiose, portrait that you painted of me.
No pressure.
I have no doubt that you will live up to it. So let's jump right in. You've been a journalist for a long time. How did you get into covering cannabis?
So I've been covering weed since around 2011, 2012. I can't remember exactly when I wrote my first pot story, but I think it was actually about, it was for the San Francisco Examiner. It was about kind of the drug war more generally. That's why I got interested in weed. As it turns out, covering illegal drugs is pretty complicated for a lot of different reasons. Obviously, and I think I got pushed into weed specifically because I was researching a story about illegal drug sales in the Bay Area, and through a source, I'd learned of a meeting in Oakland of all the major, or a number of major drug kingpins in the area. And what they would basically do is they'd get together for dinner every month, and they would divide up all of the drugs that were moving through the port. And they would decide, like, oh, I can take that
Wait,
shit.
you got to sit in on that dinner?
No. They would decide. They would say, like, I'll take that amount of Molly, I'll take that amount of heroin, or whatever was coming through the port. An editor at a magazine in the area asked me to go to the dinner, at which points I decided there's no fucking way I'm going to do that because I don't want any of them to know who I am. I don't want them to know what I look like. And I realized, like, oh, well, maybe I should find another way to cover the drug war that doesn't involve going to meetings with high-level drug kingpins. And so weed was quasi-legal, I guess, in California at the time, so it presented an interesting opportunity to sort of explore an area of interest for me. So that's how I got started, and I covered it sort of off and on, very specifically about California I've been covering it since then. So I hope that answers your question.
It does. So we just did an interview with someone, and you said that you're kind of taking a turn and you're more interested in the U.S. market. Can you talk about a little bit about that?
Sure, yeah. I mean, the Canadian LPs, as everybody has seen, had I would say a significant advantage over the rest of the world in terms of growing and launching businesses, in the sense that they are operating in an environment where there are federal rules and there's federal legality for recreational and adult use. They have access, arguably they have had access to capital. It's been difficult for them because even in Canada, prior to full legalization last year, access to money was challenging, but it did exist. Hedge funds in Canada were able to invest. High net worth individuals were able to invest.
Pension funds.
Pension
everybody.
funds.
The institutional money was replete.
That's right. So they had a massive advantage, which it looks like they've squandered for the most part. I hate to say, but if you look at
investors would agree.
Yeah, if you look at the expectations that they themselves set. They have failed to meet those, and there's lots of reasons for that.
But that holds for the
fault.
U.S. MSOs too, right? Every MSO that went public gave these 2019 projections that were probably 2, 3, maybe even 4 times more aggressive than what the revenue that they've actually generated. Do you think what's happened in Canada is a function of challenged management who doesn't actually know how to grow the product at scale and sell it? Is it a regulatory issue, or is it a capital markets issue?
I think there's a number of things that are going on at the same time. The lack of retail stores in Ontario is real. There aren't lineups outside of every pot store in Toronto if you go, but 25 stores is truly not
insufficient.
Yeah, it's really not enough access to the product if you want to give people access to it. So that's definitely true. Quebec is another example. There are long lineups outside the SDQC, or I'm sorry if I'm getting the acronym wrong, or the abbreviation wrong.
Right.
But the government-run stores there. Alberta seems like it's done a good job so far, but Alberta's not one of the largest 2 provinces. So access to retail is a real thing, and the same is true in California. Those 2 things are working. I think it has been challenging to grow cannabis at scale. I think that everybody, you were taking essentially what was an illegal product and making it into a legal product. And I think there's a lot, I don't think anybody really knew how to grow cannabis at the scale that companies like Aurora and Canopy are attempting. There's also, in Canada, there's also no legal edible products. There's no legal vape products.
There will be.
Yet.
There will be. Yeah, absolutely.
What's the date? December 11th. We're recording this, so we have a couple weeks.
Yeah, January 1st, right?
Yeah.
December 6th. I think December 18th, actually.
Oh, is it?
Yeah,
okay.
that's when they'll be allowed to be sold. Whether there'll be products
on the shelf
will
be on the shelf yet.
is a different
Yeah.
story. I can't speak to offhand. So, if you look I know a fair bit about California, so if you look at California, the reason I brought up edibles and vapes is because if you look at California sales, vape and flower sales have essentially inverted in the past 4 or 5 years. As vapes become more popular, flower becomes less popular. So I think there's a reasonable argument that, people are going to want vape products, and Canada doesn't have them. So there's just a number. Those are a few of the many, many reasons why things haven't gone so well. Having said that, I want to give Canada a lot of credit for being the first industrialized country to legalize adult recreational use, and B, what? And B, that, we're a year in. So there's a lot that needs to get worked out for a fledgling industry. And I don't think pointing to Canada and being like, oh, well, it hasn't worked yet is really like a fair assessment of the of what's going to be the reality in 10 or 15 years. I can give you one anecdote from Canada. In the 70s, when you went to the liquor store there, you had to buy things from a list. There weren't products on the shelf, and they gave it to you in a brown bag so you couldn't see it, right? That's
Really?
liquor.
Yeah.
And liquor's been legal around the world forever, practically, aside from a few countries and
weird years in the U.S.
a short period of time in the U.S.
Max, you covered the capital markets.
So I think
right?
I'm just going to say I think there's a long way to go with legalization in Canada. Anyways.
But sticking with Canada for a second.
Sure.
It's a year now and a couple months since it went full legal and you can buy flower. And what happened in the capital markets was there was this rush to buy the Canadian LP stocks up until October 17th of last year. And as soon as it went legal and you could actually buy stocks, buy cannabis, those stocks started to tank. Do you expect to see an uptick with with the ability of new form factors expanding the markets to more more provinces, but more stores opening? Do you think that we'll see a somewhat of a rebound in the major Canadian LPs, or do you think that market has played out?
That's a good question.
Thank you.
You're welcome. It depends. I'm loath to predict the future because I can't do it, and I've never pretended like I could. But it's at this point, investors are looking for results. So I think when companies start to demonstrate results, I think the stock prices of those businesses will reflect that. Having said so, realistically, like the valuations that the Canadian companies were enjoying last year weren't plausible. I mean, there's just no way Green Organic Dutchman was ever a $900 million company. It can barely sell marijuana.
It can barely grow it right now.
It can barely grow it. That's right.
Most of them struggle with this, though.
Right. I mean, Tilray went public at, I think, $17, if memory serves. It was trading at $300 intraday.
One trade, though.
Fine, but it was enjoying levels above $200 for a while. It did a convertible debenture deal at what the strike price is $153 or something. I mean, it's trading in the 20s now, right? So Tilray didn't say to the market, we think our stock is worth $150. The market said, we think your stock is worth that amount. Yeah. Part of it's.
Same thing happened with Akerna, right? Though when Akerna came out at 11,
yeah,
it spiked to 70, and then it came right back down, and now it's trading at $5-6 a share.
Yeah, and IPO prices, the price of a stock after an IPO is typically very choppy and volatile. There's nothing new about that. Those valuations were extreme, I would say. So to return to your question, my point about valuations is that I'm not sure that the Canadian LPs ever deserved, if I can use such a loaded moral word, those elevated
warranted.
What?
Maybe warranted.
Warranted, yeah. If they ever warranted those kinds of valuations, so I don't know if they can return there. The Canadian market's relatively small, 38 million people. So it's but I think investors now again are very focused on results, and that's what the LPs have to show. I think there's going to be, I kind of joke with my colleagues that I want to start a Death Watch blog, because I think that's what we're going to start seeing. Our LPs are going to start dying. We haven't seen any sort of blow up quite yet, but some are very close and running out of money.
And are you thinking 2020 is going to be the death knell for a lot of these companies?
I don't know about a lot of them, but I think we're going to start to, I think some companies are going to go bankrupt. Or their asset, or practically, and they're going to be acquired. Their assets are going to get acquired.
Yeah, because you can't in U.S. Your cannabis company cannot go bankrupt.
Well, right? there are state laws and stuff.
They will go through state chancery courts.
Yeah,
but there is no federal bankruptcy protection.
That's right.
And given the odd regulatory structure, the cap tables, these are strange.
Right.
You look at the MSOs, they have the holding company, they have managed service agreements, they
right.
have individual licenses that they hold, and if one of these companies runs out of money,
mm-hmm.
There's going to be an auction of their licenses, of their properties. Like, what happens?
Well, I mean, I would imagine it depends on the specific company, the state it's incorporated in, where it's operating. There's a lot of variables there, and if you look at any of the prospectuses of the MSOs, their holding company structures look like Alibaba's, frankly. Like, they're just, if you look at a Chinese IPO in the U.S. markets, the corporate structure is like it's labyrinthine. They're huge, and I've posted them on pictures of these things on Twitter because they're so ridiculous looking. So I think it really depends on the company. For investors, like, the first people that are going to get their money are the debt holders. That's who's going to get the assets. They're first in line always.
Gotham Green and those guys.
It depends on who's holding the debt. But stockholders are always the last to get their, to get any whatever's left of the company. So, yeah.
The last couple of months have seen the U.S. Last couple of months, 19 has been a shit year for U.S. public companies in this space, right? Starting about March, you've seen literally a march down in the share price. From where they were, many of them are down 50, 60, 70%. What do you think 2020 is going to hold?
I don't know. I mean, like I said before, I I really don't like trying to predict the future. There's a lot of regulatory uncertainty still, federally, as well as each state has different issues to work out. I think people are looking for things like the SAFE Act to pass or some change federally, and even if the STATE Act does go through the Senate, which I think, given the current political climate, is
They're
probably
a little busy.
Yeah,
So
I think
here's
it's
a
unlikely.
snowball.
Yeah.
Here's the gates of hell. What chance does a snowball have?
exactly. Not so great. And even if it does pass, according to sources that are familiar with banking activity, it's pretty unlikely that there'll be suddenly like Goldman Sachs is not going to just start taking weed money after if the SAFE Act passes. It's unlikely that they will do so. They're all looking at it. They're all thinking about it. It's also worth considering that for the banking industry, weed is still a fairly small industry. Like if you look at the combined market cap of the sector, and Louis, you're exactly right. Like 2019 was a bad year for weed stocks in the U.S. The S&P 500 is up 24% this year, and all of the major weed ETFs, which I don't love, but they're the best barometer that I've got, are down 30%, 35, 40%, which is like they're literally trading the opposite direction that the rest of the economy is.
But the weed ETFs are very constrained on what they can hold, right? They can't. Most of them can't hold CSE, and none of them can hold OTC. So you look at a company like Kush, they can't be in an ETF. Acreage, for the most part, can't be in an ETF. The ETFs are holding the Canadian LPs that are trading on the U.S. exchanges or on the TSX. They're not holding the major MSOs.
Well, there's a U.S. weed MSO that trades on the NEO. So there are ETFs that do,
right.
and like I said, they're not perfect. They're not perfect examples. Of the they're not perfectly representative, but they're a decent barometer, and they're still like just not doing great. I mean, so I mean, I would imagine they're doing worse than if you were to aggregate all of the U.S. weed companies into an ETF type thing. Can't imagine they're doing better than down 35%. They're probably worse. You got companies like Tilt off 90%. I mean, the company went at $5.25, I think, and is trading in below $1. I mean, that's a pretty dramatic haircut.
And anybody who owns their stock is going, oh my God, what the fuck is going to happen now?
Well, I mean, if you talk to them, they're trying to turn the business around. So they said they had some management problems last year, and they say that for what it's worth, Tilt did post $44 million in Q3 revenue. I mean, it's a real business. Blackbird and Baker, those two technology sides, they're real companies. They have operations in California. I've seen them at trade shows. It is a real business. The head scratcher is why it makes sense as a combined entity, and we'll see.
What are you looking forward to at the show?
That's a very good question. I've never been, so I'm looking forward to just experiencing it for the first time. I'm not an old guy. I'm 38, but firsts are always exciting, and I'm excited to meet a lot of the people who I've spoken with. I'm excited to see old friends. Some of my personal friends are here, so I'm excited to spend time with them and in this environment.
How do you navigate this? So normally you go to a trade show as a reporter in the space. How are you navigating the space? How are you are you walking through and just seeing what comes to you and what you find of interest? Or are you, there's very specific people you want to meet with, you're making the time for them. How are you kind of navigating all that?
Well, as I've said a few times, in my time here so far in Vegas so far, Mark, I'm trying to pivot our coverage a little bit more towards the U.S. So I think as a result, I'm taking meetings with executives from, the U.S. multi-state operators to, meet face to face. I've done a fair bit of planning, but, I'm hoping maybe some serendipitous stuff will happen over the course of the next few days. And at this point, I've still never even seen the trade show floor. So I'm going to have to go walk around it at some point.
He's still a trade show floor virgin.
You prevented me. I'm just looking at it right now. It's like I can see it. It's
right
right there.
He's literally salivating. You've been covering this space now, a long time, since 11. What is the biggest, the most underreported story in cannabis? What's the story that either you want to write or you want to see somebody write?
I mean, I think that's a really good question. I think there's
That's three, by the way.
All
Three really
right,
good.
all
No,
right.
no, you had one and I had two. It's good.
well, that's what PR people
What?
tell the interviewee to say to
No,
the
actually,
reporter.
No,
my
we
team
say
says they
no.
never
Don't say that.
Oh, really?
It's
Yeah.
their
I've
job
heard-
to have good questions.
I've heard that
You
was
don't- you don't need
a thing that
No.
some people,
Not
not
us.
you guys.
No,
No.
it's
Other
your
people.
job to ask good questions.
Yeah.
And you do.
Fun fact about PR.
I didn't know that. I didn't know that you guys didn't teach that. I've definitely seen that in
No, we
training
do not
material
teach that.
before. Anyways, I mean, I think that I don't really think there's one story that hasn't been covered enough, or I would like to go cover. I think that there's a lot of smaller pieces right now that are going uncovered, and a lot of activity that's going unreported on because there just aren't enough people in the cannabis press corps that are looking. And I'm speaking very specifically about business coverage. There's companies that are doing things that are either too small that are just not enough readers, frankly, to and I only have so many hours in a day to report on.
Lazy.
I know it really is. It is primarily laziness. And but having said that, there is some excellent reporting in the weed trade journals. I think Leafly just published a story. I'll plug David Downs's. He put up David Bienenstock just posted a 5-part series on patenting plant genetics, which that's an important intellectual property is a huge part of the business. I think I don't remember which outlet it was, but last year when California started to test stuff for heavy metals, there was some reporting around lead in vape cartridges. Those things are.
C-Cell had a tough moment there.
It did, yeah, it did. I mean, especially with the vape stuff that's going on right now. So, I mean, I guess, like I said, I think there's a lot of what I would call smaller, like thematically. I don't think that I'm not seeing any massive coverage holes. But there are a lot of sort of smaller stories that I think are just being untold. Also, like as far as something I would like to do personally is synthesize what has happened and sort of like explain what has happened, because I don't think that anybody has really successfully done that so far. Like, this is how we've got to where we're at right now, or like what happened last year. Like how did I don't know if anybody's even written the story. Like, how the fuck did Canada legalize pot? Like, why did that happen?
That would be a good story.
Might be. And I mean, there's a lot of great characters in Canada too. That's the thing.
My
Is
God.
like when you're in any time a business is, and this is happening or will happen in the States. I mean, as well. Like if you talk to Hadley Ford, one of your clients, he'll say, or he has said that you need 3 types of people to run a successful weed business. You need like the MBA type person, the manager. You need the agriculture person, the person who understands that side, and then you need somebody from the illegal business, right? Because it's
institutional knowledge.
It's institutional knowledge, and I mean, I think that's one of the mistakes that cannabis companies have made is they're trying to shove off the image of the what they see as a stoner, right? But that's actually your best consumer. Like stoner is probably not the best word, but enthusiast or whatever you want to say. But that's the person who's the most interested in the product. And aside from medical patients, obviously.
Well, it's 20-80, right? 20% of the patients, 20% of the people who walk into a dispensary are buying 80% of the product right now. It is, it's literally, that's what it is. And these are people who are, buying on a weekly basis a couple $100 worth of product, whether it be, flower or alternative forms. The industry has bet on the soccer mom, the Chardonnay mom who's vaping, who will vape, to come in. And they haven't yet. It's still the historic consumer who is used to buying the dime bag, in the Ziploc from their buddy, who have now said, all right, I'll just walk into a store and have a better selection.
I mean, I think that's a gross oversimplification of the illegal market. I think that often I've heard weed executives talk about how unsophisticated the illicit market is, and they, again, grossly misunderstand what is actually happening. I mean, if you have ever bought weed illegally in California, it's not some guy in it from a dime bag. You're buying it from a friend who grows it, or somebody who knows somebody who grows it. Like and that's a trusted supply chain. Like what they're trying to displace is actually very complicated. And to say, well, there's no brands and there's no whatever is just like, it really, there's no Coca-Cola, fine, but there definitely are trust relationships, and there are it's going to be, like I said, I think weed companies, the ones that don't have that institutional knowledge of the illicit market, I think are not going to understand or grasp what they need to do to be successful, because the illegal market is still massive in California, in Canada.
It's 3 times the size in California, right?
I have no idea how anybody measures an illegal business, so I think they're all just guesses, to be honest with you. But it's significant. I know through sources. I know people who, I know people who buy it from the illegal market. I know people who are participating in it. I mean, it's big, and it's not going away so far.
But if I am the CEO of a public MSO, how can I knowingly hire somebody who is a criminal?
I mean, that's not really something I can talk about. I have no idea.
Right? No, but I understand what you're saying, that you have to have
a criminal, but a criminal under laws that are changing.
I got it, and I
right?
personally, I agree. But my personal feelings don't matter here. I have both a fiduciary and a legal responsibility to not knowingly do something that's illegal, right? So
I mean, that's like a technical question that I would refer to the lawyers. I would say find the good person and then deal with the other stuff.
Yeah.
I mean, that management is the most is critical, and if somebody who you need to hire and trust and you need to hire has gone to jail or been arrested for marijuana related offenses, then so be it. I mean, I think that's part of the reality of doing business in the industry at this point. I mean, weed is illegal federally. If a FBI agent walked in here, they could start arresting people if they wanted to. That's the reality. I mean, I'm not saying it's going to happen, because, like, come on, look around. Like,
there's 30,000 people here.
That would be ridiculous.
Right.
But they could be prosecuted. They absolutely
who
could
are those
be
guys with
charged.
the helmets over there?
I have to go. So
Max Cherney, it's been great talking to you.
Yeah, okay, guys, great. Have a great, enjoy the rest of the show.
Yeah, Max, honestly, thank you for being so generous with your time.
A pleasure.
If you guys aren't reading MarketWatch, you're missing out.
You should definitely read it. Yeah.
He is truly the best
breaking news
journalist
all the time,
who is covering this from a financial space. So thank you so much for your time, man.
Absolutely. Glad to be here.
And we are joined by Emily Paxhia from Poseidon Capital.
Welcome.
Emily
Thank you.
is one of the smartest, most accomplished venture investors in the space. And also, with a name like Emily, we can also assume that you are a woman, and you clearly are. There are not very many women on the venture side in any type of venture capital role, and specifically in cannabis.
That's true.
How did you get into the space?
I always say we had a 2-aspect entry into the space. The first is that I think we were very compassionate and open to the idea of medicinal marijuana, because my brother and I co-founded the company. We lost both of our parents to cancer starting in 1996. And when you go through something like that, you see all of the issues that exist in our healthcare system as they are today, and what it means to go through all of those ravaging treatments that really tear the body apart. And it was a hospice nurse that off the cuff made a comment when he was so sick that maybe, cannabis could have been a thing. That was 1996. Definitely not a popular thesis, and I think it just gave us a really open mind around taking this more seriously than other people. And then the other side to that was it's just clear opportunity space to participate. So those were the 2 things that got us in. We just feel like this is the opportunity of a generation. And I always say it's not been easy investing in this space, but by any stretch. But if I woke up today and saw someone else doing what we could have done, I would never, my whole life would be ruined from here on forward. So I had to do it. It felt like compelled to do it.
And you got into business with your brother, Morgan.
I did.
How family is tough.
Yes.
Yeah, I mean, how has that been? You guys have been successful, but
Yes.
what are you good at? What is he good at? Like, how do you complement each other?
It's a great question. I think that we share a lot of ways that we think about things, but we also approach it very differently, which gives us a lot of complementary support to one another. Getting into business with my brother, we came from a family business. Our dad had a real estate business, and our mother got her real estate license and was also an accountant. So she really they worked really well together. And so I think for us, it was a model of how you work together. We also grew up sailing together. And sailing, you can face many really sketchy and scary situations out on the water. And I think you learn trust and what it means to be in a crisis situation together. And not to say that investing, you find yourself in crisis situations, but you find yourself certainly in challenging situations. So we knew this industry was going to be, it was very early when we got in, I think it's 2013 when we're doing this. And we knew that we had to be in a group of people who could just trust each other implicitly. And I think that it served us very well. And so he's extraordinarily good at the details and digging in once we're into a deal. I would say that I am kind of more on the big picture side of things, although he's an incredible big picture thinker too. I think that he's just very good at focusing in on those things. And he has an acumen for math and for financial structuring that I don't see in many other people. I have so much respect for him, and I always say I've learned so much from him, so much more than many other people.
You invest other people's money.
We do.
Talk about the very first check that you got. Can you take us back to the story? And if you can name a name, name the names. If you can't, just tell the story of getting that very first check.
So the very first we were the very first investors in our own fund, and we continue to invest in our funds.
That doesn't count.
No, but I feel it's important because I don't think that's always the case. But our very first investor, I still have the voicemail from when he
Really?
said he was going to come in. So our first investors were really lawyers and people who really understood the real versus the kind of externally facing appearing risks, I would say, that are the perceived risks of the industry. So our first investor, he's actually from New Orleans, which I also found very amazing because New Orleans is not necessarily a cannabis
Louisiana
capital.
is not a friendly
Yeah.
cannabis state.
Yeah.
Right?
And
Ish.
so,
Not really.
yeah, I mean,
Ish.
we know you can find it in the jazz clubs, and
Well,
that's
yeah.
wonderful.
Yeah.
But so we can't really say the names of our investors, but I will say that I saved that voicemail. I remember exactly where I was sitting. We were on our way actually on a diligence trip, and I was in the back seat of the car. And I remember listening to the voicemail and just being like, all right, here we go.
How much money have you deployed to date?
How much have we deployed? Actually, you know what? I don't have that number off the top of my head at this particular moment because we've got
Ballpark it.
probably 100 million.
And you're raising for a third fund?
With second fund.
Second fund.
Yeah.
Okay. 75 million?
75 to 100.
Okay.
Yeah.
Okay. How close are you?
We are we're about 55 right now.
Okay.
And we have another close coming, so it'll go up from there.
Okay.
Yeah.
You know, this year's been a tough year in the
Sure.
capital markets, and you are competing now with. There are a lot of other funds out there. How
Sure.
do you differentiate yourself from the other funds? Because, you know, Merit is raising money, Entourage is raising money, you guys are raising money. Yes, I said your competitors' names, I know.
That's okay.
I
love them.
And it is.
Room for
There's
everybody.
room for everybody.
Yes.
You know, it's not like you guys, you
Yeah.
all do similar deals. You'll do deals together.
Right.
You'll do deals alone.
Right.
But when you're talking to a potential LP,
Mhm.
what's the differentiator for Poseidon versus, you know, Mitch?
So, I mean, first of all, we're the best. No, I mean, I'll start with this. I think that we have been managing an actual fund for the longest time in this industry of most of the names that you just mentioned. Other people have been investing one-off into the industry, but it's a little bit different when you're managing a diversified portfolio of companies and thinking about the synergies, the exits, all of the different structuring that you're looking at for doing all of that and putting that together in a really mindful way. So for us, it's time and market is definitely a differentiator. We also, during that time, the first thing we identified was that there was a very real lack of data that was being gathered. I mean, there were big surveys that were kind of coming out annually. We knew that if we became a warehouse for data for our own inputs of information, that would serve us incredibly well. And so that's one of the things we've done from the beginning. And we're about to put out a white paper about the cycles we've observed over the last 6 years and what we predict.
I'd like to read it.
It's coming soon. And so actually probably before the end of the year, because it also has to do with our predictions for 2020. And so I don't think anyone else has that level of data on this industry because the inputs we have are so bespoke. I mean, it's what's
What
coming
are the
into
inputs?
It's literally inbound inquiries from companies where we're tracking we're almost like doing an angel list or a pitch book in our own back office of deal flow that we're seeing, structures of deal flow, valuations, rounds that are closing, who's leading what, all of that information, multiples, how we're determining our valuation comps. I mean, it's just endless. But also, Morgan's been brilliantly been able to overlay some of the public market activity from what we're seeing on the private. So it's and the amount of capital that ebbs and flows within the industry in Canada versus the U.S. I mean, it's a lot of information that we have, and we really try to drive our own insights out of that, not just have it. So it's really incredible.
Are you finding it? I mean, companies need cash, right? Like capital is so hard to come by. So does that make your job easier, or does it make it harder because now you're getting an influx of people, companies maybe that didn't need as much before, or does it make your job harder or easier?
It always cuts both ways when the capital's flowing or retreating. You know, we saw capital run to the sidelines in the beginning of 2018 when Jeff Sessions rescinded the Cole memo, and that's when we saw all of those companies go to Canada for the RTO process. That was challenging in its own sense because it's like now we're changing the whole dynamic and velocity of how capital is flowing and the expectations around liquidity. Now we're seeing a serious drawback of capital because one of my friends just sized the market. He's at an investment bank up in Toronto. The capital market where it was at the end of September was the same size as the capital market where it was in September was the same size as Canopy gross market cap in April.
Wow.
The whole capital market. So it literally compressed that much over that 4-month drawdown or 3-month drawdown, but and then the vape crisis kicked it in the teeth. So capital is out, people are starving for resources, and a lot of people were spending pretty carelessly. So we're seeing a great washout right now. It's going to be an interesting reset time for sure.
Are you guys only private investors, or are you also investing in the public markets as well?
Fund 1 has had an allocation in the publics of up to 20% roughly, and Morgan does run a bit of a long-short strategy in some of that, kind of intraday or intra-week. But in the late spring, we actually saw that the headwinds were increasing, so we took that position size way, way down. We're like under 9% in the publics now, which has served us very well. We're only in our long names on that right now.
Can you name any names?
I mean, I love GTI. I'll say that all day long. I love those guys. I've known them for years before they went public, so I think they're just really mindful.
Ben is great.
Ben is great. Anthony, I love all of that team. They're amazing, Jen. But then I also... the second fund is pure private. It's a VC structure. Think like Sequoia Capital or A16. That's where we're sitting with that approach. Yeah.
So you mentioned a white paper coming out and talking about 2020. Can you give us a little insight, maybe, what you're hoping to see in 2020?
Go McLaughlin Group on this. Predictions.
Predictions for 2020. I actually think we're about to see some of the best companies emerging from the industry at this time. I think this is where we're going to see the great separation. Yep. I believe we're about to see real teams who have real fundamentals focused on the long vision of this industry. The fast money is washing out the backside of this, and I think what we're going to see are the companies that will be the ones that truly IPO on the NASDAQ or New York Stock Exchange coming out of 2020. I don't think it'll happen in 2020, but these are the names that are going to be to watch.
All right, again, can you, if you can, name names?
I'm going to name names. All right. And I'm talking my book here, okay? All right.
That's fine.
Obviously, Headset, FlowHub. I think that Spark, which not a lot of people know, which is a single state operator in California, killing it quietly, but doing a beautiful job. I think operators like that who've been running for 10 years, who know how to run a lean business and now are able to capitalize on the challenges of this market and really hit the accelerator, those are the types of companies that are going to kill it.
You know, you talk about Spark as a single state operator, which I believe gives them actually a competitive advantage over the MSOs because their CapEx costs are significantly lower. You don't have to build out a grow in 10 states, processing in 10 states, dispensaries in 10 states. Do you think that arbitrage is going to enable Spark, when they do go public, to go turn around and maybe snap up some of the other MSOs because they know how to run lean and mean, and then they will have capital that the other smaller MSOs might not have access to.
You know, it may very well flip around to be that way. And it's funny. It's a really interesting observation, Louis, because I feel like everybody was like, okay, it's going to be the MSOs or the absolute consolidators. And I do think a couple of those names will be because they've operated pretty well in this. But I do think that there is a depth to the single state operator. And you're getting right to the point, which is the operational efficiencies of that. That's one of the things with the questions of what's happening in the capital markets. Yes, it's the time to scale and the time to grow. But if capital should retreat, can you flip into cash flow positive mode? And that's really important to us.
There's a company that we work with called Redbird, which is out of Oklahoma.
There you
They're
go.
in the same, like, who knew? Oklahoma,
I
fastest
actually
growing.
love that market.
It's
Yeah.
unbelievable, right?
Yeah, we have lab testing there.
8 million people live in Oklahoma.
Yeah.
400,000, 5% of the entire state now has a card, and they have reciprocity. So I look at Redbird and say, these guys are self-funded. They have almost no desire to go public, right? They have access to low-cost capital themselves.
Right.
And they have a way to get into Texas. This is a company that is positioned to become really big.
Yep.
You know, I think that we have worked with other single state operators in California. We worked with a single state operator which is now expanded out of Oregon. You know,
Yeah,
these are
us too.
companies that are smart. They're staying small intentionally.
Correct.
Big, they're big small, right?
Yeah.
Big in Oregon, big in California, but they're not in Illinois and they're not in Arkansas, right? They're just in the states that they need to be in.
That's right. That's right. And I think that another thing coming out of this time of exuberance is focus. Being really focused and staying core. Like if that license is just too much money and the ROI on it is going to be impossible to achieve, don't do it. And I think that that's something we'll see a lot of because we saw a lot of investing a lot of capital into licenses and then the state regulations changed, opened up more licenses, and the value went right off a cliff. So I think there's something to that focus. Yeah.
What other states do you like? Or what states
how
are
about countries that I like?
Or
Yeah,
countries.
countries.
Yeah. Take that.
Okay, so I went to the Web Summit this year, which was awesome, and they're very interested in cannabis, which is neat because it's a 700. It was huge. 70,000 people in a 700,000 person city. So all of a sudden you're taking over like 10%. But anyway, the point being,
we saw the pictures online, by the way.
I know. Tahira and I had some fun. But so I got to go and see Northern Swans, which is now called Clever Leaves operation in Portugal, which is
client of
incredible.
KCSA's.
That's a client of I love Clever Leaves.
So
So I'm very bullish on markets like Colombia, Mexico, Portugal, who are basically going to be a part of this whole supply chain, globally speaking. And I'm really interested in seeing how that infrastructure is developed.
What about Greece? What do you think about? Have you looked at Greece?
So I get a lot of inbound inquiries from Greece. Truth be told, I have to spend some time understanding it. I mean, Greece is the motherland of our namesake, so I think that Poseidon needs to.
And it's going to be a real burden to go and check out Greece, right?
It will be. It will
yes. Santorini, you don't want to go there.
I don't want to know. I don't want to know. Hope you know. No, I think it could be interesting. I'm thinking about it. One of our investments does have a distribution relationship through Greece, and so I think there could be some interesting things there.
How many companies have you invested in, and who is the one company that you want to try it out and say, we were so right, these guys are killing it?
Mm-hmm. Okay, so we've invested in over 50 over the lifetime of the fund. We've done over 100 rounds of investment, so many follow-ons. Okay, so I get, honestly,
You love all your children
I
equally.
love all of my children. I'd say the one that so in 2014, I was on a panel, and I'll never forget, and someone said, what is the thing in the sector that you think is missing that you're waiting for a company to come along for? And I said, data. And along came my boys at Headset, the guys who founded Leafly, spun out, Cy, Scott, and Brian, spun out of that and moved on to build Headset. And when they came to us and pitched us the idea, I've never so quickly been done.
My money.
This is all the things that I'm looking for, true tech and data analytics. I know. And for me as an investor, it's been an incredible resource because the information I'm getting from this, so it's a virtuous cycle of having invested in them. And I just love the way that they're developing. But at the time, it was not necessarily a popular thesis because people were like, oh, people won't want to have data in this industry. And I was like,
what?
You're right. Nobody wants to know really what's going on. But it was one of those moments when everybody was talking about all these other things, and I said data. And I was like, yay, finally I got something. Like, I said it out loud on a panel, so it's registered. But yeah,
nice.
That's my baby. Yeah, one of them. One of my many babies that I love and adore.
What are you looking most and we'll wrap it up with this. What are you looking most forward to at the convention, which you haven't even stepped foot into yet?
Okay, so when we first started coming to MJ Biz Con, there were 800 people. So every year,
35,000 this year.
35,000. So every year I walk the convention floor, even if I can only make it through 20% of it, because usually I run into so many people, and I love this industry so much. So but every year I have to get on the convention floor because for me it's the most tangible development that you can see. This industry has truly flourished over 6 years of doing this. It has exponentially grown, and I see it as a leading indicator personally. And so I walk the floor and I look at to see what's trending, what's hot and new, and also to just see how far these booths and these companies have gone. I actually get kind of choked up when it happens because it all kind of gels for me what we've been building this whole time. So I'm excited for
Emily,
it.
thank you so much.
Thank you.
We're going to want to have you back and do a full hour with us.
Great. Love it.
And we'll let you know.
Thank
Cool.
you so much.
Thank you.
Thanks, Emily.
Thanks.
Yes, we have a surprise guest, Richard Carleton.
Return guest.
Third time.
Third time?
Is it third time?
Third
Wow.
time.
Third time's a charm. Excellent.
We'll just call you
So-
Trey.
Yeah, exactly. So Trey is the CEO
We won't do
of
that, sorry.
the Canadian Securities Exchange or the Cannabis Stock Exchange. And the last time we talked, the world was a very different place financially, especially for the publicly listed cannabis companies. What do you see 2020 holding from a public markets perspective?
I think we've seen some really interesting trends develop just in the last few weeks. There's been, I think, a breakdown in the correlations in the sector. So what I mean by that is that the companies all tended to trade more or less within the same range, whether they're Canadian LPs, US MSOs, or what have you. And with the third quarter results being reported by the Canadian LPs in particular, and obviously very trying circumstances for the Canadian LPs because of the retail bottlenecks in Canada. Obviously the reports were quite negative, and the stocks of course reacted accordingly. The US MSOs on the other hand, by and large, have been hitting their benchmarks, and things are certainly very encouraging in terms of their revenue trajectory,
Yeah, but the stocks are still
EBITDA
getting
growth.
punished.
Well, actually, no, not since sort of 2 to 3 weeks ago. That trend has actually reversed itself. So yeah, I mean, on a year-over-year basis, down 50, 60, 70%, that's true. But as I say, I think we've seen a reversal of that long-term cycle really just within the last 2-3 weeks.
So we saw the bottom.
I'm not ready to call it ding, 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 ding. There,
Okay.
the bell went off. It's the bottom because there's a little bit of, again, the smarter guys in the sector than me tell me that there may be a little more tax selling and portfolio trimming and
Yeah,
so
Lewis
on.
called the bottom at
Towards-
December 31st.
towards the end of the year.
December 31st is where I think the bottom is because of tax loss selling.
But I think we can see it from here. And again, the really encouraging sign is that the companies are actually trading way more on the fundamentals than the hype. And I think that's an important sign of maturity for the sector, and something that I hope and expect to see in 2020.
Do you think retail investors are starting to understand that, or do you think they're not?
I realize that Canadian retail investors have gotten a bit of a bad rap through this whole thing. Look, it's still principally a Canadian retail investor game. And you are seeing, as I say, the correlations break down, which indicates people are, in fact, beginning to trade many of these names on the fundamentals as opposed to the hype.
We have 2020 is another pivotal. I mean, every year is a pivotal year in the industry, but you're going to see new big states come online. Illinois, Michigan, Maine will finally start to have adult use. Not a big state, but Maine will have adult use. Finally have stores open. We should see an acceleration of stores opening up in Massachusetts, and this is going to start to show through in the earnings of the U.S. MSOs. Probably not until the second half of the year. is that when you think that we're going to see another rapid acceleration in shares, or do you think it's going to be a slow, steady climb? I know you can't predict the future, but if you
well,
could,
as I say, if I could, I'd have another job,
Yeah.
and you wouldn't have ever heard of me.
You wouldn't be schlepping it with us.
yeah, exactly.
Yeah, no, exactly. I'd be living in that penthouse in the top of the
Exactly.
Cosmopolitan.
Pretend you didn't
or
know
whatever.
us, Richard.
Yeah, exactly.
But do you think it's really that we should start in the second half, like June, July, we'll start to see a more rapid acceleration in the stocks?
That's a plausible scenario. As you say, I obviously not smart enough or insightful enough to know, when the trajectory is likely to pick up. I do say that, again, the fundamentals for many of the U.S. MSOs are very impressive. And as you say, with the continued liberalization of policies in a variety of states, and again, the opening up of more retail opportunities in the states that are already legal for recreational use, obviously can only benefit in effect, the good operators.
You've seen a slowdown in listings this year.
No, we haven't.
All right, well then correct me, please. I like
Lewis
being
is
wrong.
spreading rumors.
I live life wrong, so go ahead. So correct me.
Yeah, so in point of fact, we are likely to exceed the number of listings on the new listings on the Canadian Securities Exchange this year over last. The difference is, of course, is size. So that instead of seeing the significant U.S. MSOs, for example, come in with valuations on the enterprise side in the billions, what we're seeing now is a move to companies from South America, Israel, Caribbean Basin. We have 2 Asian companies. Our first German company listed a few weeks back. So combined with a resurgence, and I appreciate you guys don't care about this, but in the junior mining space, in particular gold exploration,
We do care.
means that we've actually got a very, very healthy pipeline. Considerable number of listed companies come to the market so far this year. But obviously, the headline number in terms of market cap is much smaller than it was for 2018.
Do you think the massive values that the cannabis companies brought in and the attention they brought to the exchange has helped that pipeline, or has it made non-cannabis companies reticent to look at the CSE?
No, I think it has had a very positive knock-on effect across all of the sectors. We've been able to open relationships with investment banks in Canada, the United States in particular, but also, as I mentioned, from places from around the world. And that's given us an opportunity to work with them on different industry sectors. E-gaming is going to be an interesting one. We've had a few e-gaming companies list. It's an interesting sector in that it may not be obvious what the investment thesis is to get ahead of what I think is going to be a very, very important industry in the coming years. Already is, obviously. But we're seeing a lot of investor interest in some companies coming from that space.
The Canadian institutional investment community has really kind of leapt to the fore in bringing capital to the cannabis market. And there are questions about efficacy, ethics, the way they do business. Do you see the increased attention that the cannabis, markets have brought to the big Canadian investment banks changing their behaviors, or are they still going to continue to behave like they did with the minerals and mining space, which has been a little bit more cowboyish?
Well, I think this is in part a Canada-U.S. cultural clash because
yes, because the shirt you're wearing, I would not wear. Which is beautiful. I love it. It's totally a lumberjack shirt.
Is this one of the ones that looks good on you?
Exactly.
And then there's a flannel. There's a lot going
you've got
on.
the red and black check flannel shirt and the green tie. So
I got to tell you, there is literally nothing more satisfying than splitting wood. There really isn't. It is. And I've had, this is, I guess this is not a family show, but I've had women explain to me that there's nothing sexier than a man with an axe splitting wood. So there you go.
Okay, Melissa, you hear that? I'm getting an axe.
Dear Stephen.
Get an axe.
That's right. Just in time for Christmas, folks.
Exactly. Stephen, your Hanukkah present is an axe.
It's an axe. I couldn't fit it in the stocking.
But where were we, by the way?
So the difference in the
I think it
Canadian,
is it's a cultural thing in that some of the trading activity that has been impugned from certain quarters in the United States is entirely legal under the Canadian securities legislation. It's different than the U.S. regulations in that some of the trade, some of the financing techniques and so on would not, in fact, be permissible under the 33 Act. And I think it's fair to say that there is going to be some commentary. I know that the Wall Street Journal and Barron's are likely to come up with some stories before the end of the year on these differences. But obviously, I take it from the positive viewpoint is that the Canadian investment industry, without the banks involved, was able to capitalize the industry in Canada, the United States. And I think it's an incredible achievement when you think about it from a public markets perspective, because you don't have to go very far to see articles with various folks talking about the death of capital formation in the public markets. Well, hey, it isn't dead. In fact, the Canadian market stepped up and filled a need for capital.
Legitimately, this is not a bullshit. This is thank you, because we're standing here at the MJ Biz Con. There's 35,000 people walking through 250,000 square feet of trade show floor, and were it not literally for you, a lot of this would not be here. So, whatever anybody says about the Canadian investment market, this industry is dependent upon you, and I, thank you.
Well, I'm not going to lie. I haven't had to buy too many drinks in Vegas this week. And when I say not too many, I mean none.
How about joints or edibles?
Sorry, I didn't hear you.
Hey, it's legal here, and it's legal in Canada, so it may not
yeah,
be.
but my mother might be listening.
Okay. So last question, and then you've been generous with your time. We're standing here a year from now, right? It's now the end of 2020. Looking back on 2020, what was the thing that most surprised you?
Well, I think this isn't obviously going to be a surprise, but there will obviously be some significant workout transactions that get done this year, as in, with the U.S. MSOs, I think we've seen who the management teams are that have, kept some capital on the sidelines, because this is going to be a war of capital cost. And we'll probably see that first, at least one where, without reference to U.S. bankruptcy law, major workouts are going to have to get done. And so they'll be done by private contract, which will be interesting, maybe messy. But I think standing a year from now, let's put it this way, I would be surprised if we weren't standing here going, you know what, that was a fantastic year. The industry is so much healthier and in a better position than where it was in December 2019, and is much more accepted. The product development has been proceeded at pace. Again, 2021 I think is actually the one where things may get a little strange.
Why?
Because with the, Richard Carleton, noted observer of the U.S. political scene, from our perch in Toronto, we're on a clear day, we can see New York State, so, but...
I can see Russia.
Yeah, that's right. We can actually see Buffalo from our house, but which isn't really a boast, but, that's where I'm coming from.
That's okay. We love Phil Carlson, who is from Buffalo. So,
Go Bills.
Please no. So you were saying, but after the election,
again, it's there's obviously a lot of uncertainty there. We could wind up with a House and a Senate controlled by the Democrats, and a wounded Mr. Trump in the White House, and that's going to be interesting. Clearly, the Senate Republicans are not motivated at the moment to do any favors for the Senate Democrats. So I think legislative initiatives, however worthy, between now and then, not likely to get any traction. So maybe that's the surprise. Maybe something will happen, whether it's on the banking side or otherwise, to alleviate a lot of the pain that the participants in the industry in the United States are suffering. So I certainly hope that's the case.
Well, thank you so much for giving us your time. Have a great show.
As always, my pleasure. Third time's the charm.
Our thanks to Max Cherney, Emily Paxhia, and Richard Carleton. Boy, MJ Biz was one hell of a ride this year. And as always, thank you for listening. If you want to chat with us, you can find us on Twitter with the handle @the_GreenRush or on Instagram @thegreenrush_podcast. Or you can always drop us an email at, a lot of ats, greenrush@kcsa.com. We're always looking for feedback, guest ideas, and don't forget to subscribe to The Green Rush in your favorite podcatcher. On behalf of Ann, Nick, myself, and Shay, we really do appreciate you listening all the way through to the end of this show. Your time is the only finite resource you have, and that you choose to share it with us is something that we never, ever take for granted. That's one take, Shay. One take.
Cannabis! Cannabis!